Estate Investing Club. It actually just started peeking out some sun here in where I live here in Tacoma. And whenever there's sun during January, February, it is a day to celebrate because we don't get a lot of sun up here in Seattle. So I'm feeling good, and I hope you guys are feeling good too. It's a good day for a second reason though, because we have Angela Healy with us on the show from Avenue West, and this is a unique episode because rarely do we have somebody on who talks about an investing strategy that has not been talked about before. We've had 600 plus guests on the show. We've covered every topic, you name it. People flip farms, people, short-term rentals, self-storage, mobile home parks. We talk about it all, but we've never had somebody on to talk about fully furnished rentals. And so that is a unique strategy that we haven't talked about, and I'm excited to jump into it. So Angela, thanks for hopping on.
Great. Thanks so much for having me, Gabe. I'm really excited about the conversation.
Absolutely. I told you before we got on here, we always like to start with stories. We like to hear how people got to where they are. So why don't you take us back to the beginning of your story in real estate and tell us how you got here?
Well, my parents started with long term rentals when I was about 7 years old. And they were able to put four children through private college. And it really was an additional income stream to the family above and beyond the jobs that they had. And so I knew very young that I wanted to get into real estate, whether I would do it right away or not. I started my career in commercial lending, but then eventually worked my way back and found myself back in real estate. So
Nice. I love it. So you had a
yes.
little bit of exposure to real estate with your parents, and now you got into it full time. So let's just talk about what the main topic here today: fully furnished rentals. That's unique because generally people either and sorry, I forgot to clarify, you guys, at the beginning, fully furnished long-term rentals. And so usually you think of a fully furnished rental, you think of Airbnb, short-term, people coming in one weekend, leaving the next week or on Monday. Or you think of, your long-term rental where you get an empty house, you got to bring your own stuff into it. But that's not what
Yes.
Angela Healy does. So tell us why this strategy, what kind of brought you to it?
Sure. So this is a little bit different. We refer to ourselves as midterm rentals. That seems to be the name coming through, and it's fully furnished rentals. So like an Airbnb in terms that all the furnishings, the cable, the internet, everything is there when they walk through the door. So all they have to bring is their luggage. But we're really providing this service to corporations that are relocating people or they're bringing people in on assignment. So they're here longer than that kind of short, hotel stay, but not so long that they would need to have an unfurnished rental. Or maybe they use our midterm rental as a landing base, and then they would find their permanent housing, whether they buy or rent, after the corporation provides them with an initial midterm rental stay to get them acclimated.
Interesting. So you guys
And
go
go ahead. And one of the reasons that I think it's a little bit overlooked, people really look at real estate in either terms of Airbnb, vacation rental, or they look at it as long term unfurnished. And especially with a lot of the changes that we're seeing with regulations in specific cities where they're really clamping down on your ability to do Airbnb rentals, it's a nice kind of midway shift. You don't have to get rid of all the furniture. You don't have to really turn your property back into an unfurnished rental. There's another option out there for you if your laws are changing. If you are in the right area, that is the main piece. Not every property is good for midterm rentals.
Yeah, and that was actually going to be my first question after that is how do you define your buying criteria? Like where are you looking? What area is ripe for midterm rentals?
So you really need to have a good number of corporations in your area that would provide this housing for their employees. So you don't necessarily want to be completely reliant on one company because what if that company decides they're doing a layoff or something? So you want to make sure you're insulating yourself from some of the economic cycles that different industries or companies can go through. So if you have a nice center of business, I happen to live in Denver, so I'll use Denver as an example. We have a lot of different types of businesses here, whether it's tech or oil and gas or healthcare. There are a number of companies here that would use corporate housing for their employees or consultants coming in on assignment. So we have a good base of companies to start with. Then, what specifically are they looking for? Traditionally, about 70% of midterm housing is a one bedroom, one bath apartment or condo or something like that.
Interesting.
And the traditional corporate housing model is a corporate housing company would come in and set up an apartment for that person. What Avenue West does, we do it a little bit differently because are a real estate agency and we're managing other people's properties. We look at it in terms of a condo or a townhome, or something that would be less transient than an apartment. And we set the entire property up with our investors, so that then we're just kind of turning the employees after that. So our average stay is about 99 days. So we're doing about
9 days.
four
Interesting.
four turns a year within a property. And then you're looking for kind of a class A. Corporations are paying top dollar for the property. So they want it because they're trying to make the impression for their employee. Number one, they are concerned about safety because they're responsible for that employee while they're staying with them. So you're looking for a building that has a doorman or 24-hour security or fob controlled access. But then they're also looking for amenities. Does it have the pool? Does it have the gym? Is it a
So,
full service property?
real quick, so you are everything you mentioned so far. It sounds like you're looking for condos. So you are not looking
Mhm.
at single family homes here.
Well, that's not true. So I said 70% of our properties are one bedrooms.
Mm.
And then we also have to have the two bedrooms in the homes. And if the majority of your investors are investing in single family homes, then you're looking for the homes where you would be relocating executives with families. So then you're talking about what school district do they want to be in and things like that. And so, really being able to provide that property that the executive would be looking for, um, that would be like a like property to what they had in their prior location.
And so what when you're talking about setting things up as a furnished rental, there is a little bit more capex in there in that you're providing the furniture.
Mhm.
How much does it generally take? Like what level of furniture and furnishings are you bringing to the property to get it to where you need it, and how much does that generally cost?
Yeah, so you do want to remember it's still a rental. So on a one bedroom condo, we're probably looking at 10,000 in capex to get that up and going. On a three bedroom, depending on the square footage, you're probably looking in the terms of 20,000.
Oh, okay. 10,000 for a one
Mhm.
bed, that's not bad. This is interesting
Yeah.
because I rarely talk to investors who like condos. Those are
Yes.
that it's just a strategy that nobody tends to. I've never invested in one myself, and I just haven't heard of a lot of people who like them at all to
Yeah,
invest in.
because it's hard because you have the HOA dues, and that's an
Yeah.
additional expense that you wouldn't have somewhere else.
Right, and that really cuts into it, but it sounds like this might, compensate for that additional expense that you have, but it really does come down to, like, what can you rent these for above what you'd rent, just your standard single family for? Like, what kind of
Mhm.
premium can you charge for these furnished rentals?
So I'm going to use the one bedroom as an example because that's what we do most of. If you are purchasing a one bedroom in Denver, you're probably going to rent that unfurnished between 1,800 and 2,000 a month. There
1,800 to
are
2,000. Is
from
that
an unfurnished for
unfurnished?
unfurnished.
Okay, okay, I was gonna say that's
So
really low. I feel like that's not
yeah,
accurate.
when we're looking at furnished with the corporation, we're probably looking at 3,500 to 4,000 a month.
Oh, okay.
Um, yeah, so there is this market for the right property. It has to be the right property. Not every property will match what they need, but it is the sweet spot for that particular property to rent it as a corporate rental. Because what you're going to get unfurnished is nowhere near enough. And then will you be able to do it as an Airbnb? You're not sure, but if you are in an area where you can do it as an Airbnb, your vacancy factors and things like that might drop into that rate, and it typically will work out better to be a midterm rental for the right property.
Yeah, and well, on Airbnb, just the operational headache that goes into those.
Yes.
Again, I'm speaking out of turn. We buy mobile home parks, RV parks, self-storage facilities, and so I
Hmm.
don't have experience with short-term rentals. And so, but as I understand it, short-term rentals, the operational headache is on the extreme end. You get people texting you all the time, yada yada. But if you're doing it this way, you're only really turning it, 4 times a year. You said
Yes,
about 3 months, so about 4 times a year.
exactly.
So it's not that horrible, but you are still
Right.
taking part of a considerable amount of upside that you would expect from an Airbnb. So I love it. It does
Yeah.
come down. Oh, sorry. Keep going.
The other piece of it is because the corporations are paying top dollar, you do need to provide them with excellent service. So if something does break, and heaven forbid it's the internet, you don't want the internet to go out. Um, you've got to be in there to repair it very quickly for them. That's the expectation of the dollar amount that they're paying. So while you don't necessarily have the operational headache of turning the property and getting it ready, or if someone had a party, or all the things that come with the Airbnbs, you do need to be kind of that Johnny on the spot. Okay, let's give them the customer service that they're looking for.
That makes sense. That makes sense. What is the OpEx ratio that you're generally running at for these?
I don't know if I know that right off the top of my head. But most of our investors, when they're looking at it from an ROI perspective, we're really looking. We need more information from them in order to get them their ROI. What are you
Yeah.
putting down? What are
Yeah.
all of the pieces, and
I
so
guess
we're.
really my question is around, so, if you do a single family rental, your expenses, monthly expenses are gonna be things, you're not gonna be paying for the electrical bill. You're not gonna be paying for, the water
Oh,
bill. These are
right.
the things that the tenant is gonna be responsible for. But I'm assuming with this model,
Yes.
you are responsible for all of everything.
Yes.
You're responsible for the internet. You have to have internet for them. You have to have cable bills for them. You have to have all these additional expenses that are put
Right.
on top of what you would generally pay for your single family rental. So I'm just trying to understand, like, what is the margin that you
Yes.
see on these type of investments?
Yeah, so when you're looking at providing the overall package, and we're doing things to streamline it, most people are using streaming now instead of cable. So as long as you have the very fast internet and the right TVs, we're doing things to try to keep those rates down.
Yeah,
And then in
cable's
some
dead.
of
Get
the
rid of it.
yeah, exactly. And then some of the HOAs include high speed internet in the
Mm,
HOA fee. So
nice.
in that case, you have that piece as well. And some of the HOAs include most of the electric as well. And a lot of the high rise buildings don't have gas. Um, so some of those expenses can be pretty minimal.
Okay.
When we're looking at a single family home, though, because we do have homes in our inventory that are in the right area, we could be looking significantly higher in the price point. So you are responsible for all the yard maintenance, or in a place like Colorado, the snow removal, all the way down to your exterior maintenance, which you would have anyway as far as exterior maintenance. But the water and the electric and the cable, some of that is capped in terms of usage to avoid abuse. Um, and and then, but on a single family home, whereas we're usually looking at about twice as much as you would get from an unfurnished perspective for a furnished perspective. But then you do have those fees that you're going to need to back out, and that's going to depend on the property
Yeah.
and where
Yeah.
it's located. Hmm.
Yeah, I mean, it still sounds like a great deal. The other
Hmm.
question that kinda comes to my mind is, how do you fill them? You've mentioned
Yes.
corporations multiple times, and so I'm
Hmm.
assuming that, you're not waiting for Zillow Rentals
Oh
or
no,
whatever,
no.
to fill your units. You're actually actively going to Microsoft being like, "Hey, we got these units. We'd love to fill them with your
Yes.
new hires," or whatever it is that you got coming into town.
Absolutely. I have a whole separate team that works on the properties, and then I have a whole separate team that works on the corporate relationships. And Avenue West has been in business since 1999, and we have a lot of strong customer relationships already with a lot of the corporations in our areas and territories. And then we're constantly out looking for new RFPs that we can bid on. The important thing there is the larger companies that you get to, they're looking for maybe one or two providers to be able to provide all of their
Mm,
housing
mhm,
needs.
mhm.
So if I was an investor that had maybe one property, that's going to be pretty difficult to get Microsoft to rent my one property. You're going to need to go through an intermediary and find a corporate housing company that has those relationships and be able to provide those tenants to you. You can go on Furnished Finders and Corporate Housing by Owner and different places, and list your own property, and you can be very successful at that. The real margins that we're talking about are going to come from the even larger corporations. So you will need to pay a property manager to get you to that relationship, but in a lot of cases, doing it yourself would yield X, and doing it through like an Avenue West will yield Y, but even minus the commission you're paying me, you're still making more.
Yeah, yeah. I mean, that makes a lot of sense. You said RFP there, and I'm like, okay, so this is this is a little bit different of a process. So these,
Yes.
and it makes total sense. These corporations, they don't want to have a million negotiations with a million
Yes.
different owners, and so they want to centralize it. They want to talk to one person,
Mhm.
and yeah, that makes a lot of sense to me. But you did mention two platforms that are out there for people who, if they do
Oh,
have one
yes.
unit, they don't want to go through a property manager, they can
Mhm.
access these resources. I think you mentioned Furnish Finders, and then one I
Yes.
hadn't heard of before, which is Corporate Housing by Owner. Is that what you mentioned?
Yes.
Yeah. So maybe.
CorporateHousingByOwner.com. They post owner owned properties, renting for 30 days or longer. And they go out and participate and try to get corporations to book off of their platform. The same way kind of Furnished Finders would do with the traveling nurses and traveling doctors. Mhm.
Got it. Cool. Well, awesome.
Yeah,
This is really cool stuff. Again, this is not a topic that we have talked about. We might have talked about it once before, but I feel like it's a very unique topic for here on the show.
it
So
is.
I love to hear it. So what do you guys see in terms of opportunities in the next couple of years? Do you see any specific metros, any trends that are affecting this type of strategy?
Yeah, so what we're seeing right now is a return to manufacturing in the United States, which is bringing a considerable requirement for corporate housing in some smaller cities. I know I had talked about originally, if you're an investor with one property, maybe you want to focus on a city that has multiple companies in it. But there are opportunities like Abilene, Texas, right now is in the middle of a boom. Different areas where they're bringing manufacturing into the area, where they're doing construction, then they're going to have the actual plant after the fact. So there are these pockets of areas where the corporate housing is going to be pretty significant. Um, and then healthcare is always a big user of corporate housing, and healthcare is in just every city. So you have that, and then technology. While we're seeing some of the AI piece kind of scaling back some of the corporations. Once I think that funnels through, they're still going to be using corporate housing in the long term. So, um,
Perfect.
and this strategy isn't necessarily, oh, let me put all my eggs in this basket. It's kind of like stocks and bonds. And, when you're looking at your total portfolio, do I have a piece of property within my portfolio that its highest and best use would be this midterm rental? And maybe I should find a solution for that particular property.
Yeah. Well, yeah, and like
Mhm.
I said earlier, the thing that screams to me is condos. So many times I've
Yes.
heard people who own condos and they're like, it was the worst investment ever. But it sounds like this is a great great use case for to turn your condo into a real
Yes.
investment that has a good return for you.
And we find that a lot as an accidental landlord. Like they own the condo when they're young, and then they finally get to the point where they're going to go and purchase their own home. Don't sell that condo, especially if it's at a 3% interest rate, right? Don't sell that condo, turn it into something else. And if you can't make it cash flow as a long term investment, maybe the midterm rental is the way to go.
There you go.
Mhm.
All right. Well, I just took a peek at the clock. We have run it down, so it's time to jump into the quick question
Yeah.
round. Are you ready?
Mhm.
All right. It starts with education. Could be any form, could be a book you've read, a movie you've seen, conference you've gone to, mentorship program you've been a part of. I just need one recommendation that you can give people to help further their real estate career.
You're talking about mentorship program. I am a part of a CEO group, so either get into young entrepreneurs, Vistage, but being in a CEO group, I think, is the most important thing I've ever done.
Nice. I love it.
Mhm.
All right. Next question is for your younger self. So if you could go back to the Angela who was just getting started so many years ago, go back to her, look her in the eye, give her one piece of advice moving forward.
Trust my gut sooner.
Nice. And I will put that in the same bucket as I wish I got started sooner. Whenever anybody mentions that, like 95% of the guests who come on say that some version of that kind of advice.
Yes.
And whenever somebody says that, I always want to point it back to you, the listener. If you've not gotten a deal done, just get it done. Just get it done. Go
Yes.
out there, buy a piece of land, buy a single family, buy a condo, turn it into a midterm rental, but get something done so you can get that ball rolling. 10 years down the line, you're going to be happy you did it today versus a year from now.
Yes.
All right. Next question is about the US. It's a big place. There is a lot of opportunity out there. Give me the single metro you're most excited about investing in today.
Right now, Abilene, Texas is booming. It's in the middle of nowhere. It has no infrastructure,
I
nothing
know.
yet, but it is everything is going there right now. So if you want to get in on the ground floor.
It's funny you say that. I was under contract to buy, or at least we were in due diligence to buy an RV park out there, and
Oh,
I didn't like the area. I didn't. I just there was something. It was so up and down, bust and boom, and it was like negative net
uh-huh.
growth. Or on this one report that I did, and I just didn't feel like it was a good area to invest in. But
Oh.
you're saying it's blowing up, so maybe I made a mistake. That's okay
Or
though.
go back and look at it again. It's not too late.
There you go. All right. Next question is about lessons learned. Not every deal we get into goes the way we expect it. In fact, pretty much every time something's gonna go wrong, and
Mhm.
that's when we get to learn a lesson. So go back to one property, one deal that you did that went a little bit sideways, and then what was the lesson you pulled from it?
Yeah, really, the lesson was being able to be adaptable. Don't be so stuck in your original idea or goal for this particular piece that you don't look at what are the other things on the sidelines. And because you can turn something that is going bad into something completely different than what you were expecting and turn it into something good or salvageable.
I like that. Be
Mhm.
adaptable and just keep going. You're gonna get hit in the face. It's gonna happen.
Yes.
The winners are the people who just figure out the next solution. All right. Next question is about. We're gonna kind of add in a different question here. Something we don't. We've been adding in more and more as I am becoming more and more a proponent of AI. I'm a huge
Yes.
fan of it. I try to implement it in as many places as I can. So the question is, how do you implement it in your own business, and how can you suggest people do it for theirs?
The biggest game changer for me was email fixer. I highly recommend it. I've had my same email address for over 25 years, so you can imagine what kind of spam and all kinds of stuff that I get. But in addition, it organizes it in terms of the priorities 1 through 5, and I found it to be very accurate very quickly, and it adapts from what I do. If like I move stuff around, it adapts to it. So I
So wait,
definitely recommend that.
is this an actual like AI tool that someone built that you like connect it to your email and it just does it
Yes.
for you?
Yes.
Really
Yeah, and
interesting.
if you want, it will even start replies,
Ooh,
based on
yes.
stuff that you have written in the past.
Yeah.
It will even start replies.
Ah.
But it has been a game changer for me. Email, because everyone assumes the moment you get an email, you've read it.
Mhm.
And I probably get about 1,000 email a day. So I have
Jesus.
not received it the moment you sent it. And so this really helped prioritize, what was important, which ones did I need to look at immediately, and which ones could wait just a little bit longer. Mm.
That's pretty cool. I was actually thinking
It
about that
is.
yesterday. That as an active investor, someone going out there doing deals, I was thinking, or somebody asked me, I can't remember how this popped up, but I was thinking about like what is the actual, the job of being an investor, and I was just thinking like it's mostly email. Like most of what I
Yeah.
do is email. And
Yes.
so if there's a way to improve that and to kind of cut through on the email, or cut down on the
Yes.
email, that is a huge lifesaver. What's the
Yes.
name of the tool you use?
It's Fixer, Fyxer. Mhm.
Fyxer. Interesting. I'm gonna look
Yes.
into that. Maybe I'll test it with one of my. I've got like a million inboxes. Maybe I'll test it with one of my
Yes.
lower email boxes and see
I
how it
don't think you'll go
performs.
back.
I love it. I love it. All
Mhm.
right. Well, that leads us to the very last question. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. This is a two-parter. Where can they find you, and then what can they expect when they reach out?
So avenuewest.com is our email, is our web address, and my email is angela@avenuewest.com or Angela Healy on LinkedIn. Those are the best ways to get me.
Perfect. I will put that in the show notes. So if you guys want to reach out, just click the little more in the description. It'll pull down that full description, and in there you can find Angela's links.
Perfect. Thank you so much.
Absolutely. For everybody who's with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions whatsoever, reach out to me, Gabe, at therealestateinvestingclub.com. If you guys want to support the show, just leave us a review or a comment, anything like that. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode.